This is day 5 for my daily series to becoming a profitable day trader. I'm going to talk to you guys about 3 things today. Number 1, a trade breakdown. Number 2, how to trade on a news day. Not the news candle, but something that I have discovered what happens after the news day. You can actually take a trade and how to take it. That's what I'm going to talk to you guys about. I'll show you my own trade. And number 3, I'm going to guys talk to you about, I will show you my A plus fair value gap model that I was talking to you guys about previously in the video. I actually take the trade from it today, so I'll show you guys. So let's get right into it. What you guys are looking at right now is London session this morning, and we had a news today. As you can see, this large move down. The news came out at 1 a.m. in the morning, New York time, but here in Canada it is 2 a.m. for me. Regardless, the news came out. We had a large displacement. This is where everybody who's new freaks out, and we're thinking like, when is this gonna stop? Are we gonna even have an opportunity to trade and so forth, right? Yes, there will be an opportunity, but this is what I did. Number 1, I took this trade based off of I had to see price running all the highs, all the lows, Asia high, Asia low, preferably London high, London low. With this displacement, we had that happened. So we make sure we enter only after a market runs all the high or all the low. And then not only that, we have to make sure that it is mitigating a fair value gap, some kind of zone where price is going to respect and react off of. As you can see here at the bottom, if I'm pointing to my finger here, all the way down, where price is reacting from. I can move myself. Yeah, I think I can. There we go. Right here. The one at the bottom, all the way to the bottom where the price is reacting from, that is the 5-minute fair value gap that I've marked. The price is literally reacting from. This is on the 1 minute that we're looking at right now. I took 2 trades. The first one was a failure, and I entered the first reversal, the first time price reacted off of it, and we got stopped out by the second leg, which was nothing at all, like, I don't know, by a tick, or it's not even a pip, right? That's how we got it. But because we had a confidence in the trade and everything played out, we ran all the lows. We were reacting off of a zone that we know it is a strong zone that is going to give us an opportunity to trade back. And on top of that, I'm going to get into it. This is going to be the next part of the video. We are trading towards the equilibrium, and that was an opportunity for me. I realized that, and on top of that, we have a formation of what we are looking for in terms of a momentum, a strength in a move. We see that, and then we enter basically, which is the 3 bullish candles of fair value gap form. I entered straight from the 3rd candle, and we led it all the way to 1 to 3, not exactly to equilibrium, but to 1 to 3, and we finished the day with green day. Now I'm gonna get into the next part of the video of the topics that I want to talk to you guys about, which is how to trade on a news day. What happens usually is we see a large candle like the one, you will have a displacement like this, or I'm actually going to show you something else. Hang on. Or price will do like, this is a news day candle. It's one move up, large move. When you see this, price taking Asia low, it will take Asia high with one move, right? When we see, so that is a news day. When that happens, usually you are expecting for market to retrace and trade back into the equilibrium, the center of that move. It will trade back towards that, and that is a move you can capitalize on. As you can see here on the screen, right here in front of me, right to my side. So this large move down, a reversal will occur, and then price will trade to the medium, to the middle of it. How do I know this? Obviously from a lot of backtesting, and also ICT teaches this. Price will always retrace to the equilibrium. You can take that trade. And obviously with the confluences you have established that we actually had ran significant zones. So what is a significant zone? All the highs, where the last session created the highest level, the lowest level, and other old highs and lows from maybe previous days. And that's what we have here. We actually ran equal lows, that was London and New York high and lows on this side all the way. And this fair value gap was the only fair value gap available from that leg up that those sessions were sitting on. The only fair value gap that was on there was that one on the 5-minute time frame. So that's what I've used as a zone to react above. And I look so tiny, but This last portion is my favorite one because I'm going to be talking about my A plus fair value gap model, which is a 3 bullish candle. The third, as you can see, we have a bearish candle overlapped by 1, 2, 3, 4 candles that are bullish, right? So the third candle we have between the third candle and the first candle, we have a gap. Good sign. There is nothing. There's no challenge. This is like 80 to 20. We are going this direction. And on top of that, the third candle, the way it closed, as you can see, it is completely bullish. There is a rejection, but it is bullish candle. So what did I do? I entered exactly from the third candle, from the top of the candle where it closed, and place your stop loss all the way to the bottom. If you like to, you can place it at the third candle if you want to. If you feel so scared and you feel so unsure, you can place your stop loss between the middle of the second candle where the gap is, the 50% of that gap. They call it the consequence of encouragement. You can use that area as your stop loss. But we entered, and guess what? We shoot all the way up toward the equilibrium, which is the middle of the leg that was just created by the news candle. I showed you on my board, the news candle could take Asia high and Asia low. If you have a large move, it doesn't matter, either to the upside or to the downside, or taking both sides but just sticking there again, price is going to retrace to the equilibrium, to the center of that move, and it will either, you can buy from that or sell off of that or trade back to it depending on where the market is sitting in the context of all of it. That's all I got for you. If you're new here, my name is Omar. I'm in my 30s and I'm trying to get my first funded account. Please like and follow the journey.